Is here first up to Ukraine and its battered finances.
Indeed. Hi there, Cyril. Hi there, everyone. Ukraine's currency has rebounded on Friday, trading sharply higher against both the dollar and the euro. It comes after Ukraine's central bank adopted measures to stop the fall of the hryvnia, including a cap on currency transactions. Also on Friday, Ukraine's prime minister and the governor of the central bank said that they're optimistic that they'll get outside financial assistance soon. Delana D'Souza has more.
The challenge is enormous for Ukraine's new prime minister. The finance ministry says the country is on the brink of falling into an abyss unless it receives $35 billion. The prime minister is looking to the International Monetary Fund to keep his country's head above water.
We will comply with all conditions. I repeat, with all conditions necessary to get this loan. Once Parliament votes all the laws to get the money.
While the Prime Minister is eager for the IMF's help, loans come with painful strings attached, and Ukraine will likely have to tighten its budget, phase out its energy subsidies, strengthen its banking sector, and allow its exchange rate to fall. In 2010, the IMF had agreed to loan Ukraine $15 billion. The deal was frozen a year later after Kiev failed to implement the necessary reforms. There are concerns the current Prime Minister won't be able to follow through on his word.
This is a government which is extremely weak and which can surely put their hands on their hearts and promise everything they want, but everyone knows that when we get to serious things, it will be very different. And then, of course, we're facing a political class which is terribly corrupt in every corner.
There were also concerns about Russia's future role. It pledged financial aid last year but has frozen this lifeline. The question is if Moscow will be a help or a hindrance.
Meanwhile, Switzerland, Austria and Liechtenstein are freezing assets belonging to ousted President Viktor Yanukovych and his entourage. Switzerland says it wants to block any unauthorized use of Ukrainian state assets. It follows accusations from Ukraine's new leaders that billions had gone missing while Yanukovych was in power. It's unclear how much money may be affected by these asset freezes. Speaking in Russia earlier, Yanukovych himself denied having foreign bank accounts. The website of Bitcoin exchange MtGox went dark earlier this week. It sparked plenty of questions among investors about their Bitcoin deposits with the company. Earlier this Friday, they got some answers from the chief executive of the Japan-based company, but perhaps not the answers that they wanted to get. He apologized as he announced the company is filing for bankruptcy protection. This as he acknowledged publicly that hackers had stolen hundreds of thousands of Bitcoins from the exchange. Those Bitcoins correspond to around $500 million worth of deposits. Now, the value of Bitcoin has tumbled since news of the security breach first broke, and some say the collapse of MtGox will undermine the credibility of Bitcoin, but some people who work with the virtual currency say it could be the opposite and that it could actually help.
MtGox itself was originally built for trading cards, not at all a platform for large financial exchanges. So now that we see companies like that leaving, it's going to create a void in the market where larger, more established financial institutions can come in and really help take Bitcoin to the next level.
Okay, we're going to take a look at the stock markets next in the United States. It was a pretty volatile session on Friday. The indices sold off sharply at one point on concern that the Ukrainian crisis would take a turn for the worse because of Russian involvement. In the end, though, the Dow and the S&P 500 were actually in positive territory at the close, whereas the Nasdaq was down with Apple shares weighing on that particular index. European shares, they closed mixed with the FTSE in London flatlining. The DAX, meanwhile, was pulled up by shares in the drug maker Bayer as it issued a pretty upbeat forecast there. We still have time for one more bit of news. Citigroup says a fraud scandal in Mexico will take $235 million off last year's profits. The American bank says its Mexican subsidiary had been duped by fraud. The scandal centers on short-term loans given to oil services company Oceanografía. Citigroup says some of the loans had been backed by bogus documents. Mexico's Attorney General has now ordered an investigation. That's the business news for now. Back to you, Cyril.
All right, business news. Thank you very much, Marcus Carlson. Let's get straight to Media Watch with James Creedon, who's joined us on set.
Evening, Cyril.
Yeah, good evening, James. We start with the presence of troops wearing unidentified uniforms in Crimea today. Their identity was a source of confusion, to say the least, in the media.
That's right. Lots of photos doing the rounds of social media, and I'll just show you a couple of the ones flashing across my Twitter feed today, identifying those unidentified uniformed soldiers. This is a photo by our own Douglas Herbert, pointing out a dozen or so soldiers in unmarked uniforms leaving Simferopol airport at around 11 a.m. Another photo here by AFP photographer Vasily Batanov. So creating an awful lot of intrigue, an awful lot of questions, an awful lot of finger pointing. We saw these headlines across the world's media today. The Ukraine's interior minister said that essentially saying that it was an armed invasion and occupation. So very strong language indeed. That was being denied in some corners in Russia. Yet it seems on the Russian Foreign Ministry website that there was a sort of admission of sorts. They said that armoured units from the Black Sea Fleet base near Sevastopol had entered Crimea in order to protect